Hey guys, welcome back to the channel. It's Henry with some straight facts about investing in high growth industries, options, and stocks. Today, we're switching it up a bit in honor of the late Charlie Munger to talk about how you can get rich like he actually did, which most people don't know about. There's no doubt when it comes to investing, Charlie Munger was a true legend and he should be honored as such. Before we dive in, remember to smash that bell and subscribe to the dopest family on YouTube. On this channel, I make sure we get stupid rich and make passive income to live a life of freedom. In today's video, we're diving deep into the world of finance and exploring how the legendary investor Charlie Munger, known for his partnership with Warren Buffett, actually made money with options. Munger's investment strategy is rooted in long-term value, and we'll uncover how option trading aligns with his approach and how you too can succeed with his approach, option trading, and creating a life of freedom for yourself. This isn't talked about because both Munger and Charlie don't actually reveal what gives them an edge in the market. But I know. They stated their intention is not to be educators, but operators of Berkshire Hathaway. So with that, let's jump right in and get to it. Section number 1, understanding Charlie Munger's investment approach. Before we look into how Charlie Munger made money with options, let's examine the core ideas of Munger's investment strategy. Munger was a huge advocate for value investing. This is actually what I learned in my education. What does that mean? It means he's not interested in chasing every hot trend or getting caught up in the market's daily volatility, which is easy to do. Instead, Munger sought out companies with competitive advantages, strong financials, and a track record of sustainable growth. In fact, he once said, the big money is not in buying and selling, but it's in waiting. But Munger's success goes beyond just picking solid companies with a great track record. He's a big believer in what he calls a lattice work of mental models. Picture this, Munger has his mental framework, a toolbox filled with concepts from various disciplines, psychology, economics, mathematics, you name it. And he uses these mental models to make informed, rational decisions in the unpredictable world of investing. So, here's the first nugget of wisdom. Munger's success isn't just luck, it's a result of a disciplined approach to value investing and a unique way of thinking that goes beyond traditional financial analysis. Got the groundwork laid, let's segue into the fascinating world of options and see how Munger weaved his magic in that area. Section 2, Introduction to Option Trading, the Munger Way. Now that we have an understanding of Munger's investment beliefs, let's jump into the world of option trading and how he exploited the option market to squeeze profits from the market and make money from thin air like an insurance company. Options are a financial instrument that give investors the right, but not the obligation to buy or sell an asset at a predetermined price before or at the expiration date. They can be powerful tools to make some serious cash. But how did Charlie Munger, a hard advocate of simplicity, make money with options? Unlike some investors who see options as mere gambles, Munger approached them with a clear understanding of their utility and risk. Munger knows the time value of money, which is a simple financial concept that $1 today is worth more than $1 in a year due to interest. Munger uses options to collect money today for some potential future obligations. This is done by selling an option and collecting premium. When you sell an option and collect premium today, you have a potential obligation if the stock goes down. However, the cash you collect is current cash you can invest today. Section 3, Charlie Munger's perspective on option trading. As we explore Charlie's perspective on options, it's crucial to understand that Munger was not a frequent option trader. In fact, his approach to options was grounded in caution and strategic mindset, consistent with his broader investment philosophy. Munger viewed options as a financial tool that could enhance the returns and lower risk. One key aspect of Munger's approach to options was his focus on simplicity. He believed in investing in businesses and financial instruments that he could understand thoroughly. This approach extended to option trading, where he favored straightforward strategies over complex ones. The simplest strategy Munger used was sell put options on stocks he wanted to buy anyways. See, when you sell a put option, you collect premium in exchange for the risk of having to buy the stock. However, if you want to buy the stock anyways, then you essentially don't have any risk at all. If you plan to buy a stock for $100, why not get paid to buy it for $100. That's essentially what Munger did to increase his exposure to the market. This strategy is something I also utilize in my Discord community as a means to collect passive income, just like Charlie Munger. This is a medium growth safe strategy that yields consistent returns. Munger once said, "The game of investing is one of making better predictions about the future than other people." How are you going to do that? One way is to limit your tries to areas of competence. If you try to predict the future of everything, you attempt too much. You're going to fail through lack of specialization. That's exactly why an area of expertise is important when investing. Technology stocks have been my bread and butter for many years. Here's another clip of what Munger had to say about this.
We want to buy something that's intrinsically a very good business, meaning that an idiot could run it and it would do all right. And then we want that business, which an idiot could run successfully, to have a wonderful person in it running it. And if we have a wonderful business with a wonderful person running it, that really turns us on, and it works very well. Warren sometimes says you have to choose good person or good business. You know what he says? He says good business. He wants something that has such tremendous strength. I had a friend when I practiced law, and he said, if it won't stand a little mismanagement, it's not much of a business. And we like businesses that stand a lot of mismanagement, but don't get it.
Munger's engagement with options was marked by a strategic use of covered calls. Covered calls involve selling call options on a stock that an investor already owns. By doing this, Munger generated additional income from his stock holdings while maintaining exposure to potential stock appreciation. Munger's utilization of options was not driven by the desire for quick profits or speculation. Instead, he saw options as a means of enhancing returns on his existing investments while minimizing downside risks. This aligns with his emphasis on a margin of safety and the preservation of capital. Munger's perspective on options reflected his broader investment philosophy, a disciplined and patient approach that prioritizes long-term value over short-term gains. Now, let's examine how Munger applied this approach. Section 4. Case Studies of Munger's Option Trades. To truly understand how Charlie Munger made money with options, let's look into specific case studies that highlight his use of these financial strategies. One instance involves Munger's investment in the Walt Disney Company. Disney faced some difficulties in the 90s, and Munger saw this as an opportunity to enhance his returns using options. Instead of just holding Disney stock, Munger used a covered call strategy. He sold call options on his Disney shares, allowing another investor the right to buy those shares at a specific price, known as a strike price. The covered call strategy provided Munger with several advantages. First, it generated additional income in the form of premium payments from selling the call options. This income acted as a buffer, particularly in periods of stagnant or slightly declining stock prices. Second, Munger retained ownership of the underlying Disney shares, benefiting from any potential upside in the stock's value.
If you guys want to get all my trades, see my live coaching sessions where I trade and actually buy, sell, do technical analysis and fundamental analysis, and just get me as a coach for the rest of your life, then make sure to click that first link in the description.
By strategically implementing covered calls, Munger effectively turned a passive stock investment into an income-generating asset. This approach aligned with his emphasis on creating value from existing holdings while managing risk. It's important to note that Munger's option strategies were not about making aggressive bets, but rather about optimizing returns with the confines of his circle of competence. Munger also invested heavily in Coca-Cola. Munger, having a long-standing investment in Coke, employed options to enhance this yield on his investment. Having a long-standing in Coke, he sold put options on Coca-Cola stock, granting another investor the right to sell shares to him at a predetermined price. This strategy allowed Munger to collect premiums while potentially acquiring more Coca-Cola shares at a discounted investment. But these investments underscore Munger's strategic and deliberate use of options. The goal was not speculation, but rather the enhancement of returns and risk management within a value investing framework. While these examples showcase Munger's success with options, it's essential to approach option trading with a deep understanding of the associated risks and to tailor strategies to individual investment goals. Now let's transition to how Munger approached risk management with options. Section 5. Risk management and option trading. As we look into Charlie Munger's approach to option trading, it's imperative to study risk management, a fundamental principle that guided Munger throughout his investment career. One key element of Munger's risk management strategy was the conservative use of options. While engaging in covered calls and selling put options, this was actually very carefully done not to expose himself due to undue risks. For example, covered calls, for instance, provide additional income, but Munger maintained ownership of the underlying assets, ensuring that he participated in any potential upside. This is done by selling out-of-the-money options. Munger's aversion to excessive risk also manifested in his avoidance of complex and speculative option strategies. He stuck to strategies that aligned with his circle of competence and were easy to understand, rather than the more complex strategies that are hard to understand and even harder to manage. This disciplined approach meant steering clear of option strategies that could lead to substantial losses or unintended consequences. The use of options while enhancing returns was also secondary to Munger's primary goal of preserving capital. Believe it or not, option trading is very good at preserving capital, and he recognized that. While options could be a powerful tool, they also carried inherent risks if done unright. He approached each option trade with a clear understanding of the potential downsides and implemented strategies to mitigate risk and hedge his overall portfolio. The risk management principles in option trading were an extension of his broader investment philosophy. He sought a margin of safety in every investment, ensuring that the potential rewards justified the risk taken. This measured and thoughtful approach contributed to Munger's long-term success as an investor. As we draw insights from Munger's risk management strategies, it's essential for investors to adopt a similar mindset when considering option trading. Understanding the risks, aligned strategies with one's level of expertise, and maintaining a focus on long-term goals are crucial elements of success in the dynamic world of options. In the final section, we'll look at the lessons we gained from Charlie Munger's approach to option trading and how you can apply these principles for yourself to become stupid rich. Section 6. All the lessons that you need to implement to make a lot of money yourself. As we wrap up our exploration into how Charlie Munger made money with options, it's essential to distill the key lessons that investors can glean from his approach to option trading. Munger's success with options was not just about generating profits. It was about aligning these strategies with his overarching principles of value investing and risk management. Lesson 1, simplicity is key. By opting for straightforward strategies like covered calls and selling puts, Munger demonstrated that simplicity can be a powerful ally in navigating the intricacies of financial markets. Lesson 2, aligning with your circle of competence. Munger was unwavering in his commitment to investing in areas he thoroughly understood. Before engaging in option trading, ensure that you have a comprehensive understanding of the instruments and strategies involved. And this aligns with Munger's belief that staying within your circle of competence is a crucial factor for success. Lesson 3, risk management is everything. Munger's emphasis on risk management and option trading underscores the importance of preserving capital. Before entering any option trade, carefully assess the potential risks and rewards. This is exactly why in my Discord community, I go over asset allocation and other boring concepts that I don't cover on YouTube that are very important for actually managing your money. You see, everything is risk management. If you properly manage your risks by having diversification, but proper diversification, because if you over diversify, there is really no difference between holding an ETF and holding 50 different stocks. So there's a very careful balance in risk management, and it is probably the most important thing along with rolling to understand. Lesson 4, long-term mindset equals success. Munger's use of options was not for short-term gains, but rather for enhancing returns on long-term investments. Adopting a patient, long-term mindset is key when applying option strategies. This aligns with Munger's overarching philosophy of holding quality investments for very long periods of time. In fact, here's Warren Buffett's favorite holding period.
When we're looking at a business, we're looking at holding it forever. And we want to be sure we're getting an adequate return on capital. We don't regard what we can get on short-term rates now as adequate, but we'll still a little bit and start settling for lower rates for 30 years because rates for 30 days are so low. We would rather just sit it out and wait a while.
Lesson 5, continuous learning and adaptation. Munger's success was not a result of a static approach, but a continuous process of learning and adapting. As an investor, stay open to evolving market conditions and be willing to adjust your option strategies as needed. The markets are very adaptive. They're always shifting. In fact, if they were predictable, we'd all be millionaires. The market isn't that easy, so it's very important to keep learning, keep studying, and keep adapting to the market. Conclusion. Here's the deal, guys. If you're ready to elevate your investing game, take a page from Munger's playbook. Embrace simplicity, know your stuff inside out, manage risks like a pro, and don't forget that success is a marathon and not a sprint. We've seen Munger's philosophy of simplicity, his strategic dance with options, and the incredible importance he placed on risk management. These aren't just abstract concepts. These are the markers that assisted in Munger's success in finance and becoming a billionaire. And he's a true legend. You can also be a legend by smashing that like button, subscribing to this channel with notifications, and checking out more videos on option trading, which you can see on the screen right now.